Mic check, 1, 2. Can you hear me? I'm just letting some people join in and we're going to get started here. Gabriel, welcome in. Edward, welcome in. Davo, nice to see you part of the team. Welcome in. Chanel, welcome, as always. Mic check, mic check. Okay, so you guys, you can hear me. Good. All right, I'm just giving it a couple more moments here to let some other people join in. I want to make sure my mic's working all right before we really get started. Okay. So I said it once, but I'll say it again. Hello, everybody. Welcome in. Happy Memorial Day, first of all. I hope that you were able to take some time on this long weekend to be able to relax, refresh, and mostly get prepared for another week of trading. The weekend's always the best time to be able to go through and do some studying or review your trades. So I'm hoping that some of you took advantage of that time. For those of you that are new to these streams, my name is TradeLikeGates. I run a Discord community full of awesome, like-minded traders, and in these streams, I break down my top stock picks for tomorrow, as well as mention some setups that I think have potential for this upcoming week. So, full disclaimer, this is not financial advice. I am not a financial advisor. This is just simply my breakdown and my opinions on stock setups. At the very end of this stream, I will be taking chart requests to review whatever stock you may be interested in. So if you're ready to get started, press the like button for me, show me some love, and let's go. Just going to jump right into it, all right? The first one on our watch list for tomorrow is NIO, N-I-O. This one's actually somewhat interchangeable with Tesla, in my opinion, because they're both kind of, these motor vehicle sector sympathy moves, but I like NIO better, and here's why. So it's reclaimed this blue line right here. That's going to be your 200 EMA, your 200 moving average on the daily chart time frame. I usually will always start my analysis on the daily because I like to see, what is the overall picture of the stock. So I see it had run up, met some peak, and has since pulled back and kind of really chopped around and consolidated. It is making new lows, but just barely, right? So what I like about NIO is that it did drop below this 200 EMA, but then it reclaimed it. And what's more is that it's pushing up and trying to really reclaim this 50 EMA. So these two indicators, in my opinion, the 50 EMA and the 200 EMA, when used on the daily chart time frame, are the two most powerful indicators in the game. Some would disagree, but that is my honest opinion. I love these indicators for analysis, primarily used on the daily chart time frame. What's more is that, and let me explain that to you. So the reason why I like them is because it's very clear to tell what the trend is by using these indicators, right? So if the stock is trading over the 200 EMA, it's likely in an uptrend. And if it's trading over both the 200 and the 50 EMA, well, then it's really kind of in an uptrend, right? And so whenever it gets extended off of that 200 EMA, sometimes it likes to pull back and test it as support. So you see a few times here it's been trying to validate this 200 as a support, ultimately rejected at the 50 and came back down. So we're at this point where it seems like a decision really kind of needs to be made on where this stock is going to head from here, right? Do we reject it, this 50 EMA, and bounce back around, or does it break out over this 50 EMA? We get a nice volume move to the top side, create a new high, and essentially break this downtrend that it's been in for quite some time. You know, we're looking at 1, 2, 3, 4, about 4.5, 5 months of a downtrend on this stock. So most certainly a new high over, you know, like $43 would be something significant and something to look out for. If you didn't know, motor vehicle sales are to report on Wednesday. So we may or may not see a run in stocks like Tesla and NIO, you know, all the EV stocks prior to that. Sometimes we do, sometimes we don't. It may be a case of, you know, we don't see any type of run until the day of. We may not even see a run at all. But it is a potential catalyst, and it is something that we need to be mindful of. So EV stocks for today and tomorrow, tomorrow and the next day are definitely going to be on my radar. So for this, all that we're looking for is just a continuation play of this uptrend to the top side. All right, so here's your most recent trend line as it's moving up. I kind of had a red day here last week as it got, you know, met a new high and then got pushed back down. But it may have potential to reverse, especially by open. There's a lot of time between now and open. So if it opens up anywhere near $40, you know, that's kind of what we're looking for as a trigger level. These trigger levels that I'm setting now, they're potential entry points, right? That's the whole point of a trigger level. There are significant levels to watch. But remember that stocks move pre-market, they move after hours, so there's a chance that whatever trigger level I'm giving you now may not be relevant in the morning. So it's important to just use these levels as guidance points for now, and make sure that you're adjusting your trigger levels to compensate for the overnight moves or for the morning moves, if there is any at all. But yeah, so I like NIO as a long idea over 40. What's my price target? Well, I usually aim for about 2% move in the stock. So just a $1 move from 40 to 41 is going to give us about a 2.3% move. And that's plenty to take profits on. There's actually a little bit of resistance back here. My ultimate price target would be at this peak, around $43, but you know, I don't know that it gets there in one day. I kind of doubt that it gets there in one day. It is possible, but I don't think that it's super realistic unless there's a major catalyst behind, you know, behind the move. All right, so NIO, very simple. We're just looking for a continuation play of this upward momentum. Long idea over 40, keeping in mind that motor vehicle sales are to report on Wednesday. The next stock on my watch list for tomorrow is going to be Boeing, BA. So it's had a triple gap up here. I like to indicate my gap areas with a gray shaded box on the daily chart time frame. It just gives me a way to quickly identify, you know, where these gap areas are at. So here's gap number 1 on this run up. There's gap number 2. It's very minor, but it's there. And then here's gap number 3. Actually, gap number 3 runs all the way up from about 42.5 up to 47.2, but because the gap was partially filled by this wick right here, it makes it a smaller gap, right? So this area, the low of this candle, is our new support point. So we can just draw ourselves a trend line right there. Above this candle, there's the $250 whole number, which is a natural point of resistance. Whole numbers, talking about $50, 100, 150, 200, 250. These are natural points of support and resistance in the market. So we have a couple of things going on here. Actually, I think two different scenarios that could play out, in my opinion. Well, three, but I'm only really looking to trade two of them. All right, so scenario one is that this momentum move to the top side is overdone and Boeing is in need of some sort of pullback. So let's just zoom out for a little bit and kind of take into consideration, like the extent of this move. 3 gap ups in a row, big moves up, barely any pullback. Is this momentum done as it's rejecting at a whole number being 250? And could it pull back and fill this gap down to the bottom side? That's scenario one, and it is a very likely possibility. If that is the case, right, if this support fails to hold at about 245, let's just say 245, if that support fails to hold, then we are looking at a potential short idea, a short play, with a break below 245 for a flush move to fill this gap all the way back down to 242 or so. All right, that's scenario one. Scenario two is that Boeing decides to validate the bottom side of this gap area as a support, right? So it winds up not breaking below 245, but instead gets upward momentum enough to break $250, that being your whole number right overhead. At which point, we might see 242 act as some level of resistance, or maybe 255, which I already have a trend line and an alert set right there. All right, so scenario two is that it validates the bottom side of the gap area as a support and breaks out over the whole number at 250 and continues to move up. Either one of those scenarios, I would be looking to take a trade on Boeing. Right, so if it breaks down below 245 to fill the gap, or if it breaks out above 250 to continue this momentum push to the top side. Either one I'm looking to take a trade on. Scenario three would be that it neither makes, it doesn't make a new high, meaning it doesn't break 250, or it doesn't make a new low, right? It doesn't break below 245, which in that case, it would just be range trading. And that's something that we want to kind of stay away from, especially as an options day trader, because the last thing that we want to be a part of is chop, right? There's something called theta, time decay. We don't want that to be a factor for our position. We want those directional breakout moves, and a gap fill or a whole number break is something that is likely to provide us a directional move, whereas something that stays within a range obviously is within a range, right? It's not giving us the directional move. So if scenario three is the case, I'm not taking a trade, but if it breaks below 245 or breaks over 250, I would be inclined to take a trade. So trading, what I just gave you there, by the way, is a breakdown of Boeing with different scenarios. I have taken a couple of different options and said, if this happens, then I plan to do this. Or if that happens, then I plan to do this, right? Something different. Trading is all about creating those different scenarios and having a plan for each scenario. And if your scenario doesn't play out, then what business do you have being in that trade? So if my scenarios don't trade, if they don't plan out, if it neither breaks below or breaks out and stays within, then I don't want to be in this trade at all. Right, so Boeing, second one on the watch list, looking for a breakout or a breakdown. To be honest, I would probably feel more comfortable taking a short position on this just because I feel like a triple gap up is, it's something that seems unsustainable without some sort of major pullback. Not saying that the trend is reversing if it fills the gap. I'm only saying that it looks okay for a day trade, at least for one day, and especially if the overall market sentiment is bearish, or even just the sentiment on Boeing is bearish on the day. All right, the third one on the main chart watch list for tomorrow is JPM. So this is forming what is known as an ascending triangle at the all-time highs. So let me back the time frame up to, I'm going to change the period here to week, and then I'm going to go down to max available. So you can see all of the price action, right? This is truly the all-time highs for this stock. So we're going to go back to the daily chart time frame, and I'll draw out that pattern. So an ascending triangle is a series of higher lows, right? So each one of these dips is higher than the previous one. So you have your low, your higher low, your higher low, and then your higher low, all being compressed into one single point of resistance. Now, nothing in trading is ever really 100% exact. So our resistance, we're going to loosely say, is $166. That's going to give you this formation right there. That is known as the ascending triangle. Really is one of my favorite. It's really one of my favorite patterns to trade. So what we are looking for is two things here: a breakout of the ascending triangle over $166, and that would be a break into the all-time highs. I don't really care what JPM does underneath 166. The only thing that I'm looking for is a break over 166. So I don't care if it consolidates. I don't care if it takes 4 or 5 days for it to move sideways under 166. I don't care if it breaks down. This is a bullish continuation pattern, and all that I'm looking for is a break into the highs. So it's literally as easy as setting an alert and then timing your entry properly. Right? So alerts over 166 for JPM. That's all I'm looking for. The next one on the main chart watch list, and this will be the last one on the main chart watch list before I get into some side charts, will be AMD. This was our breadwinning play here last week. Beautiful, beautiful move. I had a lot of people actually message me and say, how'd you know that was going to break out? Well, I mean, I didn't know it was going to break out, but I was I was prepared with a plan to take a trade on this if it were going to break out. And what really put me onto it was NVIDIA. NVIDIA had earnings and was like running up into earnings. And then after the earnings report, which was on this day, look what the price action was. It was very indecisive after hours. It was very indecisive pre-market. It was very indecisive the next day. And I was like, this is going to, or more than likely going to, pick a direction and make a move. And so when this happened on NVIDIA, we got a very similar move with AMD. And the setup here was very prime. This was beautiful. So I talked about earlier on my analysis with Neo about how the 50 and the 200 EMA, in my opinion, when used on the daily chart time frame, are the two most powerful indicators in the game for technical analysis. Look at all of this consolidation that's occurring, and then look at this pattern that's forming. This is it's literally an ascending triangle forming under the 200 EMA. I've just given you guys a lesson on the ascending triangle, on the EMAs, on the breakout, and this is it being put into play, right? So it's really cool that all of this is kind of coming together. I didn't plan for it to be that way, but that's really awesome. So here's what we have. A break over the 200 EMA, obviously a big breakout move, kind of confirming that it wants to move upward, right? There's definitely upward momentum behind this. Breakout over the 50 EMA, nice close up here. So what I like is that it did retrace some of the move from the high, but that's fine because we know that stocks move in waves. So something that is going parabolic all day, well, the next logical move would be down and then up. Since we already have the downward move, right? So there's our parabolic move, if you will. There's our downward move. The next leg that we're looking for tomorrow, hopefully, is that upward move, right? So it's just a continuation play from this breakout. It'll be a long idea over 81. Plus, you're going to probably want to watch and see what NVIDIA does because this is also trading. Let me back the time frame up here to the weekly and then max available. This is also trading at the all-time highs, right? So it's no coincidence that it met resistance in this area, which also happens to be what, $650. It's a whole number, right? All right, so I think that, if you like to trade Nvidia better, then go for it. I don't see a point in trading both, especially if they're moving similarly. But I like where AMD is at. So this is going to be a continuation pattern, long idea, or a continuation play idea, with a long entry placed at $81 as of right now. I'm not really looking to short this, but if I were, it'd probably be placed at 79 or 78.7 or somewhere at the bottom side where this 200 EMA is located. But this looks, it's breaking out, right? So why would we try to even short something like this as it's breaking out? The momentum is just beginning to move to the top side, in my opinion. So just look for a continuation play. For those of you that are joining in the stream late, I've already talked about my 4 stocks that will be making my main chart watch list for tomorrow, but I will review them for you right now. The first one is going to be NEO. The second one is Boeing. The third one is JPM. And number 4 is AMD. If you missed the breakdown on those, don't worry about it. You can rewatch this stream from the beginning as soon as I end the stream. It'll be available to you on YouTube for the next 24 hours. So I'm not going to review it right now live, but it is recorded. So you can check it out a little bit later. All right, let's talk about some side charts. What I'm going to do is give you some stocks that don't have a setup right now that is in my opinion tradable for tomorrow, but they are setting up for a setup that could be setting up for an opportunity that can be tradable later this week. So what I'm just going to do is tell you some levels to probably have alerts set at, and then just pay attention as those alerts go off and puts it on radar for you. While I'm doing that, feel free to post up in the chat section anything that you want me to review as far as stocks go. I just actually asked no penny stocks because I don't really trade penny stocks, and they're mostly pump and dumps anyways. Also, I ask that you don't just call out random stocks. If you do, I will probably skip it. So send a stock, send me a sentence or two explaining why you think it has potential, and then maybe a resistance point or a support point. It just makes for better conversation and helps me and everybody else understand what it is that you're trying to alert on this stock. All right, for our side charts, here we go. The first one is Twitter, TWTR. I have put this out multiple times, and I will continue to put it out until it is no longer relevant. This area is a gap. You all know that, right? We talked about my big gray shaded box. That is a gap area on the daily chart. That is a pretty large gap for this stock as well. The only thing that's somewhat worrisome about where Twitter is currently trading at in regards to this gap area is that the 50 EMA is like right overhead, which is a potential point of resistance. So if we're looking for this gap to fill, we would just be looking for a long idea over 58.6, right? But we need to be mindful that that 50 EMA is also a potential point of resistance overhead, meaning that if we took a long position over 58.6 up to that 50 EMA, we're only allowing ourselves 1.2% profit margin. It could just blow right through that 50 EMA and not even treat it as a resistance, but I'm just saying it's something to probably be mindful of, right? So like if it does break over 58.6 and you're like, yeah, I'm long on this, I'm looking for the gap fill, just be mindful of like where this resistance is located at, where that 50 EMA is located at, because you might see some hesitation or some pullback in that area. That's going to be 59.3, by the way. So Twitter right now is just consolidating under this same resistance point that it's met previously at 58.6, and it doesn't really look like it's ready to break wide open and fill this gap totally, but it is inching closer. So maybe we might see a day or two more of consolidation or a day or two more of a little bit of a pullback, but I think keeping your alerts set at 58.6 as of right now is a good idea for a potential gap fill play later on. So just how with Boeing, right, we're looking for that gap fill play potentially to the bottom side. This is the opposite. With Twitter, we're looking for that potential gap fill play to the top side. And by the way, we're not looking for this to break out and fill this in one day, right? I mean, maybe it could happen. Anything could happen. But yeah, I mean, be realistic, right? So a little bit at a time is probably what we'll get on this sort of move. Along with that, so while we're talking about social media stocks, Facebook is the next one to have an alert set on for later this week. So this is trading also at the all-time highs, and it's had quite a bit of a run off of this 50 EMA up to those all-time highs, which is why this makes the side chart. As of right now, it's seemingly rejecting these highs and may be due for some sort of pullback, but I want to keep alerts set at around $334 just in case it decides to reverse and just in case it decides to break out into new highs. All right, so Facebook over 334. The third one on my side chart watch list will be SQ. So we have talked plenty about that 50 EMA in this stream, and here it is consolidating just under that price point. I just have my alert set at $227. I would like to know if this breaks over that 50. So we have something really interesting happening here. This was a previous ascending triangle. It's kind of messy, but it is valid, where it broke out, and that's right at around the $190 price point, right? And then multiple times it has pulled back to test this area as a support. So 1, 2, 3, 4. And this most recent time, it also happened to be where this 200 EMA was located. So when we got the break over 210, this is when we started to trade SQ long, right? It was making the watch list as a long idea up to that 50 EMA. And now that we're here, we want to see what it does. Ideally, I'd like to see it hold over 210 this week. Even more ideally, I'd like to see it hold over like 218, maybe 220, and continue to validate that as a support. But keep your alerts set at 227, because if this decides to move sideways for a couple of days, well, then we have a nice range that is potentially being built, and we could look for a break of the range, just how we look for a break of the range on AMD in this area as it was consolidating under the 200 EMA. So this is literally the setup that I'm looking for to form on SQ, but it's just not ready yet. And for that reason, it is a side chart watch for us to see what happens. All right, the next one and the last one on my side chart list is going to be CGC. Nothing here as far as the technical analysis goes because it has earnings tomorrow morning. 5 minute. Let me see. Yeah, so earnings reported tomorrow morning. So you can keep an eye on any pot stock really, but CGC will be the one to watch. So, well, for me, it's the one to watch. Yeah, no technical analysis to be done here. Why? Because fundamentals always will take precedence over technicals. And if I do a bunch of technical analysis on this, well, it could just be a waste of time, because what usually will happen as earnings are reported is you get a larger move, either a gap up or a gap down directionally, and whatever technical analysis you did is probably going to need to be redone. So I'm not doing any analysis on it right now. I'm just putting it on radar for you all, and I will do my analysis on it in the morning. And I have no bias, right? I don't really care if it gaps up or down. But I might look to play the gap if it does. Oh, and by the way, if you are new to the Discord server, check out the guides channel. In the guides channel, I've included a little bit of, so it's a gap strategy that I teach in the masterclass series, but I've put that in the guides channel for you to review. So that whole section is there for you to review. So if you don't know any gap up and go strategy, it's there, right? And totally free. So check that out. All right, quick review then. Our main chart watch list will be NEO, Boeing, AMD, JPM. If you're just tuning in late, I've already reviewed those, so you can catch the breakdown on those by watching this stream after I end the stream. It'll be available to you for the next 24 hours. The side chart watch list for me this week will be Twitter, SQ, Facebook, and maybe CGC, depending on how it moves in the morning tomorrow. Let me get into some charts that you all have been requesting, and everybody that's here now, I just want to take the time to thank you for your time. You guys tuning into these sessions, it means a lot, right? And I hope that you are learning something. I keep seeing familiar names popping up. Some of you have been coming to these sessions for as long as I've been doing them. So great, thank you so much for the support. Okay, let's see here. Somebody asked, would I say SQ on the latest daily candle is a bearish candle? Yes and no. I would say that this is a bearish candle because it's known as a, so hold on, let me zoom in. This candle is known as a shooting star candlestick, right? It means that, and despite it being green, it is a bearish candlestick. What this means is that the price point of SQ at some point during the day pushed up to make a new high, right? But sellers were standing in at that new high to push the price all the way back down. So basically it's telling you that yes, the price pushed up, but it didn't close up here, meaning it's not bullish. It actually rejected up here and it pulled back, which means it's bearish. But it's not necessarily super bearish because you would expect after a run from 200 up to 227 that you would get some sort of pullback. And you would expect a pullback after this run, especially when there's a 50 EMA, a dynamic level of resistance located just overhead. But that is what you said is true. This is a shooting star candlestick. It is formed at the top of an uptrend. But I think the fact that this move right here bounced, this is like just the start of this, potentially new uptrend. I mean, you see my overall resistance lines and my overall support lines. This is just now bouncing off the lows, so potentially it could keep going up to the highs. But short term, yes, this is I would consider this probably a bearish candlestick, which is exactly why, I mentioned that it is making my side chart watch list. I think that it could pull back, absolutely. I don't think that this continues and breaks out and is ready to go tomorrow. If I did think that, then this would be on my main chart watch list and not on my side chart watch list. But I don't think it's so bearish in the case that it's going to totally reject and come back down, like all the way down here. I think that at some point, it might pull back slightly, validating this old resistance at about 210 as new support. Then we may see a recovery move from there. Or we might see this form some sort of range, like how I talked about on AMD, but it's just speculation. I mean, my job isn't, especially as a day trader, my job is not to speculate what the stock can do in the future. My only job is to identify what the current trend is and try to capitalize on that, right? As a retail trader, it's rare that you're going to get the perfect entry and the perfect exit. You just want to get your piece of the pie and get out. So the more high probability setup, in my opinion, is to just wait. Let this do its thing. Who cares what it does? Under $227. But if and when it breaks that 50 EMA, I'm prepared to take a trade on it. And that is exactly how we caught this trade on AMD. I didn't care this whole time that it was consolidating and moving sideways. I did not care what it was doing in this range, but I was ready the day that it broke out. Good question. All right. Somebody's asking, HON is a cup and handle or a double bottom pattern on the daily. So let's bring it up and let's talk about it. HON is a cup and handle. Okay, so it's rough. I kind of see what you're talking about with the double bottom. So that's kind of is really messy. So you're saying that this is a potential double bottom, right? So bottom 1, bottom 2, and it looks like a W. Typically, a double bottom doesn't look like that though. You would usually have, so a double bottom is more of a reversal pattern. So you'd have like a downtrend with a longer one side and then a smaller rally in the middle. So you don't have that right here because you have two peaks that are the equal height. And then it's followed by the second drop down with another rally. And then you get that confirmation that it is a double bottom and that it is reversing the moment that it breaks the neckline right here. So saying that this is a double bottom, I think is kind of stretching it. The shape is there. I do understand why you're mentioning that. But yeah, I mean, it's tough to call, right? Patterns are subjective anyways. Nonetheless, you have your resistance point drawn properly. You're saying a breakout at $232. I would agree with that. I mean, that is a very clear line of resistance from what I'm seeing right here. Right? So regardless of where this wick is, we only have one candle here on the daily chart time frame that has closed over $232, and it was shortly after it was rejected. Right? So this is your one candle rejection. This wick right here broke over, rejected. Broke over, rejected. Pushed up, broke over, rejected. Right? Let me go to the weekly chart time frame, and I'm going to back this up to the max available. So this is also the all-time highs. I would agree with you on the fact that a long idea over $232 is possible for a trade. If you want that extra confirmation, you might want to wait for a break of 232.65 or 233, right? Just move it up $1. I mean, who really cares about that extra, 35 cents profit margin on a stock priced this high? So it might be better for you. It might be a safer entry for you just to wait for it to break like 233 rather than 232. But there's different ways to trade it. I mean, it all depends on who you are as a trader. Are you somebody that doesn't mind a little bit of extra risk for a little bit of extra profits? If so, enter at 232. Or are you the trader that likes that confirmation and you're okay with taking a little bit of cut on your profits, right? If that's you, then enter at 233. Up to you. But yeah, this is an all-time high play. This is exactly something that I would look for to put on my watch list. Great analysis. I mean, nothing more really to be said about it. I mean, it's like Facebook, right? All you have to really do is just set an alert over the high and then forget about it. Come back when the alert goes off. Otherwise, there's no trade there, in my opinion. Mark said he loved my content. Yeah, thank you. Thank you. That's great. I love hearing feedback like that because I do spend a lot of time putting together content and putting stuff out there, and I really don't have to. But teaching is my second passion, so I'm glad that it helps. That's good to hear. It's always refreshing to hear that. All right, I see a couple people calling out like Tilray and Snapchat. Provide some analysis on those, and I will get to them. But I'm going to skip them for now, and we're going to do, let's do TCOM. Oh, wow. Okay. That's a nice setup, actually. Just looking at the daily chart right here, like without even looking at anything else, I already like this setup. Because what I see is a bounce off of support, off of the 200 EMA. I see a very clear line of resistance at $42. I see a big profit margin over 42 with room up to 45. And by profit margin, I'm talking about 7% right there. I see lower volume, right? Lower volume during a consolidation period and higher volume. So this consolidation period is also a bull pennant pattern. That is exactly what you want to see during this consolidation period as it's shaping up underneath the resistance point. You want to see lower volume, and then on the breakout move, you want to see that higher volume coming back into the stock. Right? That's going to basically confirm your move. And what'd you say about it? It's bounced twice off of the EMA, looking to bounce towards 45 and 46. Yeah, I totally agree with you. Long idea over 42. Great setups. This is exactly why we do this, or why I open up the floor to you all to be able to talk about setups, because this is something I've literally never charted this before, right? And it looks like a solid setup. That looks really good. By the way, something that has been shaping up on the daily or the weekly chart time frame, as far as patterns go or ranges go, the longer that it shapes up and trades within that pattern or trades within that range, the larger the breakout's going to be. So we could argue that this whole entire period right here is a big range with resistance, overall resistance around 42 or 41, and overall support around 35, because we have multiple tests of this area as resistance there, and most recently here, and multiple tests of this area as support here, and here. Right? So we're looking at 1, 2, 3, 3.5 months or so of a big range forming. And so when this breakout occurs over the resistance point, there's a big room here for profit margin. And if you see that volume coming back in over 42, this definitely has potential to run to 45. I would be cautious about this one wick right there, at about 42.6 or 42.7. But yeah, over that, I think you're home free. At least up to 44, maybe even all the way up to 45. Great breakdown. Thank you for putting that on radar for us. Looks solid. That looks really solid. All right, let's talk about JD. So you're saying that JD has somebody mentioned that JD looks very similar to AMD and looks ready to break out. All right, so there's your range. So it recently has gapped up. I'm assuming that occurred as a result of earnings. And what it's trying to do here is validate this gap area as a support. So you have resistance then being formed around, let's just say 73 or 74, sorry. Most recently 74, but there is resistance also at 75. Right, so we'll just kind of we'll do something like that. And okay, yeah, and you have some sort of moved up nice on the Hong Kong exchange. So you're saying there's some sort of catalyst behind this move as well. My catalyst, I would just argue that the catalyst is earnings, right? So there's your gap up, there's your consolidation, sure, has potential to move up. But what we talked about earlier with the 50 and the 200 EMA, remember that when you're trying to trade, and especially if you're trying to day trade, one way to increase your chances of being correct or profitable on that trade is to trade with what the overall trend is on the daily chart time frame. So this trend is down at the moment. It is most recently up, but is consolidating. So I would just be cautious that, if you did take a position over 74, there is some minor resistance at 75. Above 75, there's some resistance up here at like 76.7, kind of based off of this price action and the 50 EMA. And then above that, there's definitely resistance here at the 200 EMA at 78. You know what I mean? So like there's just a lot of minor resistance points overhead. So this could easily get rejected at any one of those. Meaning that if you're in a position, you're kind of guessing where it could stop. Just something to be mindful of, and something that I wanted to point out. But yeah, if it's really bullish, like, you could also argue that, hey, this is a downtrend here. I'm going to connect this rally, this rally, this rally, this rally. You can argue that it's breaking that downtrend right there and looks ready to completely reverse direction on the daily. So what I'm going to do is set an alert over 78. This is most certainly, you can definitely get a day trade off of this, in my opinion. Just be careful of all those little minor resistance points overhead. I think you're gonna get confirmation that if it's truly breaking this downtrend, I think you'll get that if it breaks over that 200 EMA and starts to push topside above it, as opposed to trading below it. All right, let's talk about BYND. Philip mentioned BYND, so we'll go over this one. Your question was, you know it had a good week, but do I think it has more juice left in it? All right. What's similar about BYND and Boeing is that both setups had a triple gap up. 1, 2, 3, gap up. BYND. 1, 2, 3, gap up. Does this have juice in it? Yes, I think so. It's BYND. I mean, look at the moves it's made previously. Of course it has juice in it. And it's got, the catalyst behind it, right? All different kinds of catalysts. So, yes, I think BYND has juice in it. But am I ready to take a trade on it this week? Absolutely not. Even if it continued to move up, I would not be ready to take a trade on this. Let's talk about this from a percentage standpoint. Just using 100 as a support. And we're going to count the candles here. 1, 2, 3, 4, 5, 6, 7 candles. So 7 trading days using 100 as a support. The stock ran a total of 50% in 7 days. Do you think that this type of move straight up sustains without some sort of pullback? This would be chasing. Even as a day trader, where it's like, well, I'm not holding overnight, right? I could just easily exit my position. You need to consider the risk to reward. There's a greater chance, in my opinion, that this comes down rather than continue up. And this is the same exact reason I'm not talking about AMC, right? The move was down here. The move was here. The move was here. Maybe the move was here. This was just out of this world. Awesome for everybody that got in. Awesome for everybody that got in up here. But I don't want to be, if I wanted to trade something that moves like that, I would just trade penny stocks. And I don't trade penny stocks. So it's really cool to watch, really fun to watch, but I'm not going to put this on my watch list because the risk to reward is, in my opinion, not there. Right, so if we go back to BYND, something that's moved 50% in 7 trading days, yeah, I mean, I think it has more juice in it, but I think it probably has a greater chance of coming down first as opposed to continuing up. And even if it did continue up, I don't want to be a part of it. There are better setups that are just now breaking out or that could potentially break out. Why would you trade something way up here, right? The move was like down here or down here. I don't think it was necessarily up here. Just my opinion, though. And by the way, it's funny because Boeing also rejected met some resistance at 250. And then BYND, look where it met resistance, 150. Right? So if you think what I'm talking about here is BS, then, I guess that's your opinion, but it works for me. Whole numbers, pattern plays, gaps, ranges. I'm giving you all the tools of the trade. You just got to take the notes. All right, let's do 2 more, and we'll call it an afternoon. So somebody asked me about PTON. Is it possible for a gap fill to 114? Yes, it is. I think so. This was one that I had on the watch list last week, and it was one that did not really perform. Oh, you said it was a gap fill to 114. Yeah, so it's already pushed up to 114. So the next resistance overhead for the total gap fill will be 116. Right, so this is going, that wick does count as a partial gap fill. But much like the stock that I just analyzed, I mean, this is kind of a stronger push up. This breakout move was awesome. This run to the resistance point at the gap area was awesome, great. Now that it's over the 250 EMA, it does make sense that it would probably pull back a little bit, maybe test this level as a support, because old resistance can become new support, and then push back up. So thanks for bringing this up, because I do need to reset my alert on that. Over 114, it has potential to 116. And then who knows where it goes beyond that. But yeah, I mean, it looks solid. As long as it maintains like 102 to 104 area as a support, I think it looks okay. All right, Nelson's saying that WDC is a bullish pennant. Possible continuation over 77 into new highs. I don't really see, okay, so I guess maybe that's what you'd be talking about as a pennant. And then if 77 is the true, I don't know anything about this stock either. Right, so let's just back it up to the max available. This is not the all-time highs, right? So that matters, because you're thinking that a breakout over 77 into new all-time highs, like all-time high trades work because theoretically speaking, there's no resistance overhead, right? That stock could run indefinitely because there's no previous price action above it. There's nothing dictating that resistance needs to be, or is $2 overhead or $4 overhead or $15 overhead. There's no there's no data there. So that's why I love all-time high plays, because the breakout potential is theoretically unlimited. Now, realistically, something that moves, I don't know, 2 to 5%. I mean, that's a solid move. Or something that's trading close to like $100 or 150 or the next whole number. I mean, logically, there's resistance in that area. So for you to say that this is a breakout of a pennant into all-time highs is incorrect, because there is resistance and it's not far overhead from where it's currently trading at, right? Just one look at this daily chart time frame or weekly chart time frame. I'm gonna draw a line at $80. Does this make sense for you? Look, support, a lot of consolidation, resistance, a lot of support, and then look where it's currently trading at now, right? And this matters because back on the daily chart time frame, if you're taking a long position over 77.5 and you're looking for the move to 80, you might be thinking, well, this potentially has room to run to 90, which will be the next, kind of like the next larger number overhead, 50, but it doesn't, right? It has room to probably 80. And you're limiting yourself on profit margin there. So just be careful. Yeah, so this, I think I would just wait for a break of 80, to be honest. I would look for because look at the volume on the daily too, right? So the volume was here on this run up and then has since decreased. And it's kind of chopping around. My guess is that you might be correct on this pennant pattern, and you only need 2 peaks to be able to draw a trend line. So if we drew a trend line here, and this holds true, and a pennant pattern is made up of both higher lows and lower highs, then the next move from here could be down, and then could be back up, and could be back. You know what I mean? So like this may still need some time to shape up before you get a larger breakout. It looks to me like this was already something that was shaping up a big range and then just faked everybody out over the top side. That's kind of what that looks like. Like obviously this level right here at 74 was resistance, and then look at this big volume move on this day to break that resistance, like that was a great day to trade this stock. And then the next day it just totally gave that back up and then traded back within the range. All right, we're gonna do one more, and then I'm gonna call it a session. I saw one. Somebody had just called it out. There we go. Carlos said CCL. Let's talk about it. CCL, ascending triangle over 30 or 31 on the daily. Ooh, you know I'm going to be judgmental of that pattern. I'm going to disagree with you, but I'll show you why. An RCL on the daily looks okay. Both are cruise line stocks. All right, let's talk about that. Let's talk about this ascending triangle first of all. Arguably, like even if I tried to stretch it, it would look something like this, because we have to, for an ascending triangle to be valid, you need a couple of things. Number one, you need a previous trend. You need the prior trend to be up, which it is, right? So we could check that. Number two, you need a flat top level of resistance, and that's at $30, right? And I see that clearly, so we can check that. The third thing that you need is a series of higher lows. And so arguably, like this is a series of higher lows, but it also can be, if I delete this, it could also arguably be a range, right? I feel like this trend line here works just as well as this trend line here. And then it's not even really clean. And if it was, the angle of it looks like this, meaning that we're not at the peak or the point of the ascending triangle to where it's going to break out. Think of it as like a bottleneck, right? And as you're nearing that price point, you're going to get that larger squeeze, that big move as volume comes in and it breaks either the resistance or the support. And if that's the case and we're waiting on this to bottleneck, I mean, we're talking about months that this has to consolidate and move. So I think that a range here is probably the better way to go as far as analysis goes, because an ascending triangle feels like a little bit of a stretch. Check out Chewy on the daily chart. This is a proper multi-month ascending triangle formation right here. Right, so whoops. And it's not even that pretty, but it is there. And this is very, very textbook too. Beautiful move, right? So here's your low, higher low, higher low, higher low, and you see how it's nearing this point right here, and then we get the breakout move. And then this is kind of like your general area of resistance. Then you get this perfect, like following the breakout move, look at the volume, right? Lower volume as it's shaping up within the triangle. So lower volume, lower volume, lower volume. And then bam, you get the big volume move as it's breaking out. And then the perfect pullback to retest that old resistance as new support before you got the move up into the, at the time, all-time highs, right? Beautiful, beautiful run up. So I just wanted to show this to you because it's a multi-month setup that had a big run following, and it broke out at the point of the triangle. So going back to CCL, right, if we were to draw that ascending triangle that you're talking about, I mean, we're looking at like months and months and months for this to set up. Patterns are subjective. I mean, I could make this look like, you know, maybe if I did something like this, I could make it look like it's, yeah, you know, this is trading right at the point. It is bottlenecking. It is looking like it's going to break out. This was just a fluke in price action. That's why you have to be careful. You've got to be really careful with patterns, because you can have a bias with your patterns. So, I mean, I'm just going to be super critical of that because it is literally my favorite pattern to trade, and if I'm being 100% honest with you, I don't see it. But what I do see is a flat top level of resistance at $30, which, by the way, is also a whole number. I talked earlier in the stream about $50, $100, $150, $200, all of those being whole numbers, But what happens when the price of the stock is priced below $50? Well, then every $10 or every $5 mark can be a whole number, right? So especially like the $10 mark, the $20 mark, the $30 mark, those are important levels. Look at this. When it was trading at $20, I mean, look how many times it was validated as a support, right? That's a significant level for this stock. Makes sense to be. The $24 mark, right? $25 mark. That's the next half level, significant level, right? $30 mark. Next major level of next whole number, major level of resistance, very significant for the stock. So yeah, ascending triangle I don't know about, but yeah, a long idea over 30.75 or 31. Sure, it has a ton. These cruise line stocks have a ton of room to make up as far as profit margin goes. We all know the deal, right? They're just kind of down because of COVID, and the rumor is, I don't actually know if it's a rumor. It might be like actual news now, but they've started back up. And if that's the case, obviously revenue is going to start flowing back in, and things will kind of return back to normal as far as the price of the stock. So yes, there is profit potential over top of where it's currently trading at. And I'm going to set an alert there, actually. Thank you for bringing that up. At this point, I don't know if there's a solid day trade here, just because, I mean, it's literally gone from like bottom to top. It did have a little bit of hesitation, but now that it's at the top, like the most ideal scenario right here would be that it maintains this top level and trades up here for a couple of days, and then you get that breakout and run move. So I'm going to set 2 alerts actually, because Thinkorswim likes to sometimes forget that I have alerts set. I will literally be watching a stock break a level that I have an alert set at, and then like not get any alert go off on Thinkorswim. Like I'm watching the stock. Like, just send me my alert. They need to fix that. Does anybody else have that problem with Thinkorswim? It's been an ongoing issue. It's really bad in the mornings, like in the early morning sessions. I literally have to have all of the stocks pulled up that I'm watching for the day on a separate chart, because I know my alerts aren't going to go off, and when they go off, they're going to be like 5 minutes late or 10 minutes late, and by that time, I'm like, dude, I missed the move. Thank you. You know, I could have made money on that. I appreciate you, Thinkorswim. You would think that they'd get that type of thing set right so they can make money on their commissions, but no, they probably don't care. They probably make plenty, huh? All right, everybody, thank you so much for your time. We're at our 1 hour limit, so I'm going to call it an evening. New month starting, right? We're moving into June, so new month, new money. If you were red last week, or if you're red last month, just wipe the slate clean. Start fresh. Who cares about the money that you've lost? It's not about trying to recoup that money. It's about being better, about not losing money. Try to have a green month this month. Make it a priority to have a green month, and try to do that every month, because it's that long-term growth that matters. Green months lead to green years. It's not necessarily green, the red weeks, or the red days rather, that define you as a trader. Don't let one loss or one red day define you as a trader. Because that's demoralizing. Keep upbeat. The long-term growth is the goal. Try to have let's have a good start to this week. Don't force any trades. Follow your trading plan. And let's have a profitable month. All right. I will see you all in chat. Thank you for your time once again. And have a great evening. Take care.